Hey, welcome back to BIZ Talk TV. I'm your business host and guide, Michael Rager, here on the BIZ Talk Television Network and NowMedia Television. All right, today we've got a new guest. He's in-house, John Mitchell. John, how are you today, sir?
Man, I am doing very well today, sir. Doing well and very happy to be here and happy to share some good information for everybody.
Well, I'm telling you, it's you're a tax attorney. We just got through that second round of the year that nobody likes. You know, if you're in corporate, just that start of the corporate season. How's it going for that?
Well, I'll tell you, we did very well. Had a good tax season, got everything out that needed to get out. And as I say, we did not let the Titanic hit an iceberg this time.
Well, that's good. That's good. Well, let's talk a little bit about, this is where we're coming in, because most of our clients here that are watching this show, small business owners may be thinking about starting up. So we've got to ultimately pick a business structure. How do we figure out what's the most tax efficient business structure for a small business? What do we look at?
The most important thing to remember about selecting a business entity structure is it's not one answer. It's not a one size fits all. The perfect structure for me might not be a perfect structure for you. And even over a period of time, the structure might not be the ideal one for me today, might not be ideal 5 years from now. So it's like a suit of clothes. I mean, you can buy off the rack or you can get, the custom made, and that's good. You're going to be much more comfortable with the tailored, the custom made. So that we highly look at the facts and circumstances and make that determination.
Well, I know when businesses are coming to me, they're, especially new entrepreneurs, they're looking at, all right, what's new? I know I've got to come something. You know what? There's an LLC, there's an S Corp, there's a C Corp. Can you give us like the 50,000 foot view of what's the difference between the three?
Yep, sure can. The easiest business form to take is a DBA. So,
Okay.
and there's no legal distinction in a DBA, no legal distinction between the owner of the business and the business itself. DBA, as the name suggests, doing business as. So it's all, if I go down and file a DBA at the county courthouse, it's all on me. So no distinction between that. So that's the easiest. It's got the advantage of being easy, and it's quick and easy to set up and quick and easy to administer.
Right.
Now, if you want to step it up a little bit, you can talk about partnerships, and then you can talk about LLCs. LLCs are a funny one that a lot of people get confused. They say limited liability corporation. That's not correct. It's limited liability company. And tax-wise, an LLC can definitely be taxed in different ways. And the good news is you get to choose. So you make an election. So it can be completely disregarded, which means you've got your LLC, and that's going to work for you for asset protection and such. And then you've still got your tax advantages. Depending on your circumstances, it's going to be advantageous for that to go straight on your personal tax return. Right. Now then, LLC can also be taxed. You can elect to have it taxed as a C Corp or as an S Corp. S Corp is also a flow-through type entity. So that means that you can do some cool things with an S Corp. You can have it pay you a salary, and over and above that salary, you can take what we call distributions, and that way you take money out of the business without it being subject to all the payroll taxes. So that's an advantage, and then you got your good old C Corp, and that's the traditional corporation that's been around for a couple of centuries now, I guess, and that's going to be the main reason you'd want to go with that is if you're trying to sell shares of stock and trying to bring in a bunch more investors. You're a little bit more limited on that on the S Corp side. So that's kind of, I guess, the big overview.
Yeah, so it really depends on where we are in our business and what we want to become. Because I think one of the things you said is these entities can change as we go, right?
Right.
Things are going to change. I got a couple companies myself. I got my LLC here. That's got my coaching company, and then I got a holding company that owns one of the companies we're franchising and all this stuff. So it does get confusing. And what happens if business owners decide to go out there on their own? They say, hey, we're going to go do this. We're going to do it, and we make a mistake.
Well, the thing about mistakes, we all make them, and nothing, almost nothing. I say almost nothing is permanent. So if you make a mistake, you can go back and get yourself a do-over. You can reallocate things, and you can start over with a different structure. So that can be done.
Well, that's good. I mean, because this, especially when we're starting out, we as business owners, we're worried about money and we're worried about cash and what's going on. And somebody says, hey, we got to hire a lawyer or we got to hire a CPA. And the first thing we see in our head is the cash register ringing, right? Mm-hmm. How do we overcome that? How do we efficiently go ahead and start up that business and, work with somebody like you and a professional like you so we make sure we do it right?
Right. I mean, I know hiring lawyers is expensive. I've hired lawyers, and I know that's a consideration. Thing you got to remember though is the money that you spend now is not so much an expense; it's an investment. Because if you do it right from the beginning, then that's one expense. But think about how expensive it's going to be if you make a mistake and have to go back and fix it later. So that's the thing to remember.
It goes back to when we were younger. There used to be that commercial, you can pay me now or pay me later.
I remember that, yeah.
That's what happens. You got a little gray go in there. That knowledge keeps coming.
Yes, sir.
So when somebody's looking at this and they're in that first year, what are some triggers that makes them say, hey, I need to maybe look at changing that structure?
Mm-hmm. Well, a lot of people start off, and this is not a bad thing, a lot of people start off with a simple DBA. Go down, you register your DBA name at the county, and then you're in business, right? And that's a good thing because it goes straight on your tax return. So let's say you've already got a business and you want to start another business, or you've got a 9-to-5 and you want to start a business. Any losses, and most businesses will have losses when you first start out, right? So losses will flow through straight to your personal tax return. Do not stop, go, don't collect $200, right? So that will go straight through, and that's going to offset your other ordinary income. So that's going to be an advantage. Now, once you start making more money, and I would say, let's say 100,000 and up, right, on your side hustle or on your new business, whatever it is, 100,000 and up, then you want to start looking at structures and things like that, because you can take advantage of some of some of the more nuanced maneuvers you can do.
Usually, that's what I tell my clients: when you start hitting commas, now it's time to go in and start taking, looking at a little bit more matured planning. I would say,
Yes.
Is that the kind of word we're looking for? So we got about 2 minutes left. So we're going to go ahead and we're going to start our business, and we're looking at from the tax side. How do we look at write-offs? That's a place where we get in trouble. How do we start doing that? What are some things you recommend as a tax attorney that business owners should be looking at? Is what can I write off? What can I not? And how do I save that information?
The general rule on that is something will be able to be written off if it is helpful in you doing business, right? So if I say, I'm going to take a vacation to Disneyland and write it off, well, that's probably not going to work, because how is going to Disneyland helping me to move my business in a direction, right? How's that helping me produce income? So the thing to remember is, if something is helping you to produce income for your business, or is otherwise helpful for your business, reduced expenses, whatever, or even like going to training, seminars, whatever, conventions, that's going to help you. Networking, get your knowledge. That's gonna be helpful. So things that can be written off are generally things that are helpful to your business.
I tell them, hire a coach. That'll help in your business. It helps both of us. It helps both of us that way.
Yes, sir.
All right, John, we got about 45 seconds. How do people get a hold of you?
Well, I'm in Houston, Texas, in Greenway Plaza, but I have customers, actually clients all over the United States, and even internationally. I have people in Mexico City. So you can call me at 713-333-0555, and be happy to chat with you. Not going to be on the clock from the very beginning. Or you can also email me, jmitchell@cctaxlaw.com.
Well, that's easy. It's easy enough to get you. So, John, This obviously wasn't your first time on camera. You seem to do this pretty well. So.
Thank you, sir. Thanks.
Well, I'm looking forward to the future, learning more some tax strategies, and we're going to learn some really good things about some do's and don'ts, and maybe a horror story or two, right?
Yes, sir. I'm going to get those all prepared for next time.
All right, John. You have a great day. This is Michael Rage, your business guide here on BIZ Talk TV on NowMedia Television. We'll be back with more right after this.